If you're still kind of confused what happened to Tesla stock towards the end of the day on Friday, well, here it is. Elon Musk reportedly plans to unveil the Tesla Robotaxi at Warner Bros. Studios lot. Tesla plans to show off its new Robotaxi product to the world on October 10th at the Warner Bros. Movie studio lot in Burbank, California, according to a new report from Bloomberg Friday, citing people familiar with the matter. The event was originally scheduled for August 8th, but was pushed back by Elon Musk for unknown reasons, leading many to speculate about how far along his mystery product really is. You can see this also reported by Financial Juice at 3:29 p.m. as well on Friday. Tesla plans to unveil the Robotaxi at the California Warner Bros. Lot. Now, this parking lot is 110 acres, so it's a large parking lot, and it's pretty historical in a lot of senses. There's been a lot of movies that have been filmed there, like parts of Batman and others. So there is some historical precedence for this parking lot. It's not just some parking lot out there that means nothing, that's just big enough to hold this event. And I think judging off of how Tesla stock reacted to just this little bit of news, Tesla stock closed the day up 3.8%, when in all reality, we just kind of know now the location this event is going to take place, or at least we think. Yeah, just imagine when we actually get closer to the event, when more details start to come out over the event, I think we probably see quite a large rally into October 10th. Benzinga writes here, while the unveiling event is slated for October, it is difficult to say when the first unsupervised Tesla Robotaxi ride will be. Musk said during Tesla's second quarter earnings call in July, however, the CEO, known for ambitious timelines, hinted at the possibility of it happening by the end of 2024. Quote, "It's difficult, obviously. My predictions on this have been overly optimistic in the past," Musk said. "Based on the current trend, you could do it unsupervised probably by the end of this year. I would be shocked if we cannot do it next year." And that's ultimately going to be the reason why we go higher after October 10th or move lower. The guidance around when we launch the Robotaxi network. Now, Tesla, as a company, as a software, is creating FSD. That's a different product than Waymo. Sure, Waymo is first with autonomous ride-hailing services, right? Cruise beat Tesla there as well, but they are geofenced. They are meticulously mapping roads and areas that they can do Robotaxi rides on or use the service on. Tesla is creating something that will not need to be geofenced, that will be smart to handle any real world conditions anywhere. Now, obviously, there's going to be some nuances here. Like, there's probably going to be some kind of center somewhere where people can take over if the car needs, taking over. Like Gary Black says here, please use your common sense, Tesla bulls. There is zero chance a regulator will grant a Robotaxi deployment license to an operator unless they set up a safety center such as this to monitor and rescue vehicles and their passengers if necessary. The regulators will require Tesla to set up a similar type safety center as Baidu if and when Tesla launches a Robotaxi network in China. These Baidu workers are clearly not driving the cars unless necessary. In discussions with investors, Tesla management openly refers to this Robotaxi setup, monitoring and rescue operations as infrastructure. Having such Tesla safety centers in the US will give Robotaxi customers more confidence to try the service once offered. And I actually think this is a fantastic idea because, again, there will be some instances, somewhere, sometimes, even on the best trained software, that the vehicles will just get stuck, or there will be, some instances where a human needs to intervene. That will just happen. That's the reality. No matter if you have LiDAR, if the car is as good as essentially a human driver. On paper, clearly humans can make judgment calls different than a computer can. When you think about that as, being something that is possible, right? People kind of sitting in a center monitoring these vehicles, taking over if you need to in one-off instances. It could be 1 out of every million Robotaxi rides, right? It's going to be a very small amount of remote interventions. But is that really the end-all be-all for the Robotaxi? Is that really going to be the reason why Tesla will end up delaying their regulatory approval? I don't think so. I think that actually makes a lot of sense if you are a Tesla stock investor, to have that center of someone that can take over the vehicle if they need to. But back to what I was saying, Cruise and Waymo, they're geofenced to specific areas, whereas Tesla, they can theoretically launch FSD anywhere. And I do think, obviously, some areas are going to be better than others. If you're going to use FSD in California, that's probably going to be better trained in California than it is here in Michigan, where there's a lot fewer FSD miles driven, like not even in a comparison. I see sometimes 1 Tesla a day, sometimes every couple of days I'll see a Tesla. And that, there's just not that many Teslas in some areas, but you can still use the Robotaxi, system if the software is good enough. And I think we are to that point. FSD works pretty damn well on my Tesla, but it still wouldn't hurt to have some kind of data center like that can intervene if need be. And I wouldn't be surprised if we get some kind of news like that on October 10th that really speeds up the Robotaxi launch. And back to my previous point, if Tesla comes out on October 10th and they say, we really don't know when we're going to launch the Robotaxi network, we're pending regulatory approval, and we just don't know how fast that's going to go, then Tesla stock's going to sell off. If Elon and Tesla come out on October 10th and they say, we're creating potentially a supervising center that will help us get regulatory approval, potentially by the end of this year in select cities or in early first half of 2025, boom, you're off to the races. That probably starts a rally to new all-time highs. Because let's be honest, if Tesla did already have this monitoring center that could take over in edge case scenarios, in scenarios where the car gets a little confused, I think Tesla could already go to regulators and say, hey, we put these safety precautions in. We're going to monitor the vehicles remotely. I don't give a crap. They could have 4, 5, 6 different feeds of cars on their monitors. Maybe they just get notified and it automatically flips to cars that are in trouble, and then the operators of those data centers can get the cars out. Something along those lines would really help the regulatory approval process, not just in cities where robotaxis also already exist. That's going to be way easier, right? Launching robotaxi services in Phoenix, in San Francisco, in Vegas, in areas where there is to some degree autonomous vehicles already is going to be pretty easy in my opinion. But everywhere else, going to Florida, going to Michigan, going to New York, and other areas that are also going to be massive markets, that's going to make it a little bit easier. So I think that'll actually be good news, and probably a missed opportunity if Tesla does not commit to that back-end safety standard. Because I think it will be harder to get regulatory approval in those other cities that are less familiar with autonomous vehicles if you don't have someone that can take over for the vehicle in those scenarios where it needs a little bit of steering. Not literally steering, but steering in the right direction or getting out of a bad situation. But in conclusion of this segment of the video, the rally that you've seen towards the end of the day for Tesla stock, I think is just a drop in the bucket compared to what you could see over the next coming weeks. As long as the economic data comes in good and we continue to see this broader broadening out of our markets. We're also going to get the Fed that is going to cut rates on September 18th, and that could be really good for stocks, really good for markets if it is coupled with good economic data. If the Fed is cutting into weakness, that becomes a bigger problem, and that is really when you're going to get a lot of this Robotaxi excitement potentially in Tesla stock is from September 18th through October 10th, right? That's going to be like the 2 weeks, 3 weeks right before the event. And that's typically when you get a lot of that, buy the rumor. And then we'll see if we ultimately get a sell the news event. But again, that really comes down to guidance from Tesla and Elon on when we can expect some Robotaxi rides to start. In other news, Woody Harrelson says he had the opportunity to invest in Tesla before it went public, but decided to turn it down. He said, quote, "This guy came up to the house and he had this really fancy, super fast car, almost like a race car. We took a ride in it. He's like, 'You want to invest in the company?' And I'm like, 'Nah, I don't think so.' That's one regret. I mean, I have many. In the end, everything's okay." So Woody Harrelson regrets not investing in Tesla, back then. Presumably this was probably 08, 09, 010, 2010, somewhere along those lines. And I think we're at a similar crossroads now with the car business, not necessarily maturing, but in a middle kind of cycle. Like Tesla's not a small car company anymore. They're selling about 600,000 less vehicles a year than GM. So they're getting up to like a GM type of status as far as the amount of vehicles they're selling. Toyota is by far the world's most popular vehicle. Toyota sells over 10 million units a year. So Tesla's like mid-maturity as far as the cars. But you're entering the second stage of Tesla's business life, and that is the autonomous segment of the business. And I think right now is another opportunity where you'll look back and say 10, 20 years from now, damn, I knew this was going to happen. I knew it was going to take some time, but I knew Tesla was going to be successful in robotaxis. Why did I not invest in Tesla? And I think that's an opportunity you don't want to miss. As of today, the order deadline has been removed in the US for the 1.99% financing rate on the new Model 3 and Model Y orders. Previously, the deadline was August 30th. However, you still need to take delivery by September 30th to take advantage of the 1.99% rate. And this is another reason to be pretty excited about Tesla heading into the Fed starting to reduce rates, because it's costing Tesla money to buy down the interest rate. Okay, if rates are, let's say, 4 or 5% on the bare minimum to finance a vehicle, that's just judging off the 10-year treasury trading at about 3.8%. Typically you're going to add 1% or 2% on top of that when you're looking at financing a vehicle, for an example. So you're looking at like 5 to 6%. For the lowest kind of interest rate you're going to get on a vehicle. So Tesla's buying down potentially 3 or 4% of the interest rate right now. As the Fed starts to cut rates, if Tesla stays at where they are and they buy down the interest rate to 1.99%, they're going to have to just buy down less interest rate, right? That's going to be less of a margin hit for Tesla. And unfortunately, this is not something Tesla wants to do. This is something Tesla needs to do to sell vehicles. And it's not just Tesla. It is all other, vehicle producers. GM, Ford, Stellantis, they're all heavily promoting their vehicles in the sense of buying down interest rates. The point is, we should see a lockstep improvement in profitability as the Fed does start to materially lower rates. And by the end of this year, by December, we're pricing in 3 rate cuts from the Fed, which looks to be a pretty well certainty at this point. And that's going to start really showing some material difference in Tesla's auto gross margins, bottom line profitability, EPS, in my personal opinion. Tesla's short interest of free float continues to decline, At 2.95%, you have $16.91 billion currently sold short in Tesla, totaling 81.97 million shares. If you take a look on Friday, you did have return shares of 1.97 million, borrowed shares 1.49 million, so that is a borrowed change of negative 482,000. So on net, you could have been looking at 482,000 shares that were actually covered on. As far as option activity from the interesting flow sentiment, you had 3 different trades totaling $600,000 with a positive order value of 0%. Over on StockTwits, currently investors feel neutral about Tesla with a score of 52. Yesterday, they were bearish at 38. So in sentiment improving a little bit today. Message volume is low at 41. Yesterday it was normal at 52. Participation ratio is high at 55. Global inventory numbers are really starting to fall now, which is great news. You want to see inventories as low as possible. The Model Y is at about 6,400 vehicles in total global inventories, Model 3 at about 5,900, Model X at 4,100, and the Model S at about 2,800. The most recent AI investor sentiment survey is showing some interesting things. Now, this survey just came out on August 28th. Bullish investors remained to some extent unchanged. The prior weeks on August 21st was 51.6% bullish. For this last week, it was 51.2% bullish. So down 0.4%, but largely unchanged. Neutral investors went from 24.7% down to 21.9%. So that is moving down over 3%. Fascinating. But bearish investors moved up from 23.7% to 27.0%. I think some of the rise in some of the bearish sentiment we've seen last week could be because we're heading into September, and September is seasonally a very weak month for markets. Over the past 10 years, we only have a 30% win rate, so you have a 70% chance of being red in September, with a 10-year average return of negative 2.6%. The last 4 years, the best September you had was negative 4.1%. The worst September you've had since 2020 was negative 9.6%. And here you were negative 5%, and here you were negative 5.1%. So your median return over the past 4 years in September is like 6% negative, 6.5% negative. That's not great. But as I have explained in a couple of videos now already, I think this September's potentially a little different because we're going to get the first Fed rate cut. It really depends whether or not we have a bad September on the economic data. If it looks like the Fed's cutting into weakness, if they're panicked or anything along those lines, Wall Street's going to sniff that out like a wolf, and that's not going to be great. But again, I think the data's so lagged behind, I'm really not worried about the data that we're going to get for this month. Now, we do have some data upcoming in the next week that will be very important. But really, long story short, if you guys have watched this channel over the past couple of videos, I would say, I think September could be a sweet spot for markets. And I think we may get a broadening out of markets, and that could very well benefit Tesla. I'm more concerned about October, but really November and December, which could be, some pretty rough months. With that said, the percent of stocks currently trading above the 50-day moving average is at 66.1%. You had 1.65% of all stocks breaking above their 50-day moving average on Friday. So on Friday, you did see more of a broadening out of our markets, and you're in a pretty good place. You could see more strength from here. You could move into the 80% of stocks trading above the 50-day moving average. By then, you're in a pretty broad-based rally, right? The last time you were 80+% of stocks trading above their 50-day moving average was the rally from November through basically the start of 2024. You haven't been there ever since. But you could also move down quite a bit. During most corrections, you get down to like 15 to 20% of stocks trading above their 50-day moving average. So I think you're right in the middle here, and there's room to go in either direction. If you look at CNN's Fear and Greed Index, you're currently sitting at greed at 63, which Thursday, you were agreed at 57. So you're definitely getting further into greed territory, which again, you could see this go further, but you've already rallied back quite a bit. I think you do need some solid good economic data, some real soft landing like data with a Fed rate cut, and that could propel markets even further. Let me know what you think about all of this information down below in the comments section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.